Good morning, everybody, and this is your S&P 500 day trade setups, and we are very much in a triangle, as we spoke about on Friday. We do have the FOMC this week, so pretty much their 3-day meeting starts. So we'll hear on on Wednesday afternoon, and at the moment, I think the market is really just hovering around up and down in this space. We can see this is last week. If you just look at last week's price action quickly, the tails. So all the selling is happening off the top. And if I just put another line, or a level, should we rather say, at the bottom of last week, that's kind of the range that we were stuck in last week. Week before it was a range. You can see there was a range, and then this is a range. So I suspect we're going to continue until the Feds come out, and then we're going to see what's going to happen from there. So obviously everybody is shaking in their boots right now because there's going to be potential interest rate hikes. Problem is, it's not potential, it is going to happen. The question is just when. So just moving across the 3-hour, you can see a pretty busy week. Big down, big up, big down, big up, big confusion. Oscillator starting to group back to the downside. All that's telling me is we're probably going to come and tag this level around 41.69, 41.70, and then move back up to look for the top of the triangle. That's typically what happens with the Fed's meetings. And if you just drill down to the hour, which is obviously what we're looking to do, we want to trade off this level, off this time frame, should I rather say. And you can see, Friday was in amongst moving averages, pin bars down, pin bars up, then a squirt up, meet the trend line, and then all the way back down. So again, above and below the moving averages, you'll see above, below. I would pretty much think that we're going to sort of look for a level, and this is probably what makes the most sense at the moment, which is around here at 42.41. If we get above that, then 42.82, and then ultimately the trend line is going to hold us up and send us back down again. But if we can reject this during the European Open, I would then suspect we're at least coming back down to this area here, which would be 41.95, and then down to 41.65 area, and then 41.50 area would be the next level to the downside. So that's kind of what I've got on the cards for today, but it is sideways, so you're going to be down on a much lower time frame. You can see the 15 minutes on Friday. The only real opportunity you had was this one here. And nice gentle move up. Probably a lot of people would have taken profit here. And you see this engulfing bar here, and then all of a sudden you get an exhaustion bar. So today is pretty much the same. Pay attention to this area here. We've already tested it today, but that's 42.39, 42.40 area. Pay attention to that. Failing that, then just get your levels in. You'll see there is another bit of structure right there, and then that tail up there is the next one. So pull back into this zone here between 42.53, 42.39, so 42.50 area. Pull back into there in a rejection. A great opportunity for another short, but you are looking firstly for this gap, and then you're looking for 41.95 or 4200. If that gives way, then you're looking for 41.50. So that's kind of the play to the downside. Play to the upside on the 15 minute. We're going to have to get above 42.53, 54 actually, test it, moving averages crossover, and then you're looking for a move back up to the top of the trend line. Anyway, that's kind of the view. I think you're going to be triangle stuck for the next 2 days. So trade with small position sizes and keep those stops tight. Anyway, hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.